Welcome to the deep dive. Today, we're jumping straight into a pretty significant upcoming market event. We want to get you well informed, fast. Our mission, like always, is basically to pull out the really key insights from all the material out there.
And today, we're focusing on HDB Financial Services Limited. It's a non-banking financial company, an NBFC. And it's getting ready for its big debut on the public market. Definitely something to understand if you follow the Indian financial scene.
Right, HDB Financial Services, maybe not as household a name as HDFC Bank, its parent. So can you unpack that a bit? What exactly does an NBFC like HDB do? How is it different from, say, a regular bank?
Yeah, that's a really important difference. HDB started back in 2007. And unlike a bank, it doesn't take deposits from the public. Its main game is lending things like asset finance, consumer loans. What's interesting strategically is its focus. It really targets those semi-urban and urban mass markets. This lets them be maybe a bit more nimble. Sometimes you could say more aggressive in their lending, hitting a fast-growing segment that, well, maybe HDFC Bank itself doesn't chase in quite the same way.
Okay, so it's carving out a specific niche, but presumably still getting some benefit from that HDFC connection, like on risk management. And I heard something about its roots being in Gujarat, even though the main office is Mumbai. That's kind of an interesting mix.
Exactly. It absolutely benefits from HDFC Bank's, strong systems and that whole risk culture. But it keeps the NBFC flexibility. People talk about its regional grounding and urban ambition. That really captures it, I think. Understanding local markets, but aiming big nationally. And yes, HDFC Bank is still the promoter. That's a big stability factor.
All right, let's get into the IPO itself. The offer seems, well, pretty large. Can you break down how it's structured for someone thinking about investing?
Oh, it's substantial, all right, up to 125,000 million rupees. That's roughly $1.5 billion US dollars. And it's split in two main parts. There's a fresh issue, about 25,000 million rupees. That's new money, new shares for HDB to grow its own capital base. Then you've got the offer for sale, the OFS. That's much bigger, up to 100,000 million rupees. This is where HDFC Bank sells some of its existing shares, basically cashing in some value from their investment.
Okay. And for the everyday investor, someone listening,
Yeah.
how are the shares actually divided up? And what's this ASBA thing you sometimes hear about?
Right. So for retail investors like you, there's 35% of the total offer set aside. Then 15% goes to non-institutional bidders, think high net worth individuals. And the biggest chunk, up to 50%, is for QIBs, qualified institutional buyers, your big players, mutual funds, insurance companies, that sort of thing. Within that QIB bit, up to 60% can go to anchor investors just before the main issue opens. That's usually seen as a good sign, builds a bit of confidence. And ASBA, it just means application supported by blocked amount. Your application money isn't taken straight away, it just gets blocked in your bank account. Only gets debited if you actually get allotted shares. So your money stays put, earning interest, until the allotment happens.
Ah, okay, that's useful for applicants. Now, risks. No investment is risk-free, obviously. With HDB, since this is their first time going public, what are the main things people should be aware of?
Well, that very fact, being a first-time listing, is a risk in itself. There's just no trading history on the exchanges to look back on. So you've got some unpredictability there. Plus, they'll face a whole new level of scrutiny once listed. Beyond that, regulatory changes are always a big one, especially anything from the RBI, the Reserve Bank of India, on lending rules or maybe capital requirements.
And thinking about the actual business, the loans they make, given that strategy you mentioned, are there specific risks tied to that?
Oh, definitely. Credit risk is huge. If the economy takes a downturn, you could see defaults rise, especially across their pretty wide range of lending. Also remember, HDB relies a lot on borrowing money itself to fund its lending. So if interest rates spike or if liquidity tightens up in the market, that directly hits their costs. And, it's maybe indirect, but any big problems or reputational hits at the parent, HDFC Bank, could potentially spill over and affect HDB too.
Makes sense. Okay, let's look at the numbers. Beyond the strategy and risks, how does HDB stack up financially? What's its health like?
The financials actually look quite solid. You're seeing total income over 30,000 crore rupees. That's about, $3.6 billion in the last financial year. And net profit has been consistent, crossing 2,500 crore rupees. Importantly, their gross NPA ratio, that's the measure of potentially bad loans, has been trending down. It's below 3% now, which is pretty good. And their capital adequacy ratio, comfortably above what the RBI requires. So they have a decent financial cushion.
So it sounds less like a flashy, super fast growth story and more like a steady performer.
That's a good way to put it. Yeah, I think steady compounder rather than hypergrowth.
And the leadership seems stable too. You've got Ramesh Ganesan as MD and CEO, Jay Kumar Shah as CFO. Looks like a solid team, and the governance structure with a diverse board and committees seems robust. That usually gives investors some comfort.
Okay, so let's bring it all together. For you, the listener, maybe you're an investor, maybe you're just trying to keep up. What's the bottom line from this deep dive on HDB? Look, HDB is clearly a well-established NBFC. It has that strong HDFC group backing, consistent financials, decent governance. So for you, it might represent, a potential long-term stability play rather than something for quick speculative gains. It probably behaves more like one of those steady compounding financial stocks.
And as this IPO gets closer, what are the key things people should keep an eye out for?
Definitely watch who the anchor investors are and how much interest there is there. That's often a big signal of institutional confidence. And critically, when the price band comes out, really look at the valuation. Is it reasonable compared to peers? If it seems too aggressive, that might cap your initial upside. And of course, always weigh against your own comfort level with risk, especially for a company listing for the first time.
Right. Well, hopefully this deep dive is giving you some real clarity and insight into the upcoming HDB Financial Services IPO.
Yeah, and maybe a final thought for you to chew on. If you buy into the whole indie growth story, particularly lending growth in those tier 2 and tier 3 cities, well, HDB's business model is right in the thick of that. So keep an eye out for that valuation, see if it makes sense for a long-term bet.